the last two trading sessions has actually been Kalyan Jewellers. Reported its strong third quarter update where we saw revenues for India business grow at 41%, overall revenue growing at around 39%, opened 4% higher as well yesterday. But since those highs, the stock has seen a sharp correction. It's down around 7% today after having corrected about 4 or 5% from the highs in yesterday's trading session as well, taking the stock down 15% from its previous all-time high itself. What are the concerns? Is it purely because the stock has seen a rally of almost 100% in the last 12 months? Is it that the street is worried about sustaining this strong growth, or is there something more? Well, we have with us Ramesh Kalyanaraman, who is the ED of Kalyan Jewellers, who joins us now. Thanks a lot, Ramesh, for joining in. And that really is the first question, because anyone who would look at your update would say, okay, there is a 39% growth that has come by on the revenue. And this is your, if I remember correctly, nearly sixth quarter of your revenue growing upwards of 30%. Now going forward, the base would be a lot higher and the stock has already seen a bit of a run up. I know it's not your position to speak about the stock price, but is this growth number sustainable? Are there any concerns around that?
As you know, we have been consistently performing over the past many quarters, as you rightly said. And we don't see any change in momentum suddenly coming in the near future because our expansion plan is on track. Again, Q4 expansion is also on track. The momentum in Q3 was extremely high, huge festive demand. Again, the number of wedding days are more in the second half of the financial year when compared to the last year. So we don't see anything changing overnight. Yes, the base is surely high, but we still believe that there is a huge way to move forward because there is a shift which is coming from unorganized to organized, and customers are coming back for their next purchase, and nothing majorly changing in the near future is what I think.
Ramesh, good afternoon. Thank you for joining in. You said there is a huge way to move forward. You can quantify that huge way for us. 40% this quarter. Is that a sustainable rate? You can say, okay, fine, for the next 2, 3, 4 quarters, this is going to be the rate that which we are going to grow.
No, I will not be able to comment on a percentage, but yes, as you told, no, we have a good expansion plan, and we already announced our next financial year expansion also. We will be opening around 180 showrooms in India and abroad. 75 out of that will be non-South India, and we will open 15 across South India and overseas. We will also open 80 Candere showrooms. So that is our expansion plan for the next financial year. And the SSGs are strong, consistently strong for the past 2 years now, 2.5 years now. So yes, the momentum is really strong.
All right, the momentum is really strong. We'll try and recalibrate those numbers once again, try and ask you once again for those revenue numbers as well. The other concern that the street has also is on margins. While revenue is doing well, it's largely because it is led by gold coins, gold jewelry, the gold prices itself. Typically, that is not very margin accretive. This at a time when you are also adding stores on the franchise route, which is also margin dilutive. So what is the margin that you would report in this quarter? And at the same time, what is the sustainable level that one should be working with?
No, so margins are almost steady at the store level because, as you said, franchisee comes with a lesser margin than our own store margin, which everyone knows, the analysts knows, the market knows. Franchisee margins are lesser than our own store margin. But otherwise, on apple-to-apple store-wise margins are almost steady. Studded mix is also strong. The momentum is across gold, studded, and all other products at the store. So we don't anticipate any margin pressure at all.
Right. Ramesh, how much was the studded mix this quarter, the studded ratio? If you could share a number on that as well. And has there been any impact from the lab-grown diamonds business, which has been sort of a trend that has emerged over the last 6 to 9 months?
No, lab-grown, as I told you, so studded mix is in the range of 30%. And it is steady over the past, meaning it's keeping on increasing every quarter because our non-South revenue mix is also increasing. Our expansion is almost across the non-South markets. Non-South comes with a better studded margin than South India, which all of us know. And lab-grown diamonds, I told you the last time also, in India, there is zero demand at the store level. Customers are not even talking about it. And in India, diamond is actually into small stones, which is worn in an ornament. So lab-grown diamond basically comes competition with the solitaire, where which is used as a engagement ring outside India. So there is no pressure from lab-grown diamonds in India, and that is why you see the studded ratio is also strong.
Right, so with all these things looking strong, the ferocity of the fall that there is in the stock price, is concerning the street about, are there any sort of inventory pile-up issues or any sort of issues that, you should apprise the street of? Because this seems uncharacteristic for just being a routine profit booking, right? It's down 15% from the highs after seeing a big rally over the last 12 months or so. So, I mean, could you comment on any sort of governance-related worries that the street might be having?
No, so as a brand, we can only do what we can do on business performance and way forward strategy execution. All that is in our hands. But what happens with the street, we will not be able to comment. But again, the only thing which we can say is that we focus on our performance, we focus on our business, and at the end of the day, street will start appreciating, right? So we don't want to actually answer for that question because we don't have an answer.
All right, we take that point. The street has already appreciated the sort of growth that you've reported. It's just the last couple of days there has been a worry. The other worry was also any update coming in on the plane sale. You have kept it as an asset for sale. You did say that you are expecting about 100 crores coming in from that.
It's done in the last financial year itself, right? It's already out of our books.
So, no, but the sale has happened or no?
Yeah, it's already out of our books. It's not...
And you are not looking to buy any other plane or helicopter or anything else, right?
No. You know that, first of all, there are better ways to travel now across the country and outside India. We have facilities. So owning a plane by Kalyan Jewellers is not even there in our agenda.
And no other immovable non-core assets that you have that you've planned for sale of? Because that was one of your strategies as well. So what are those immovable assets that you're looking to sell, non-core assets?
So you know that we are in a debt reduction strategy, where last year also we reduced our debt. As we speak, the first half also we reduced our debt. While we reduce our debt, there are certain collaterals which is there in the banks. It is land parcels, which should ideally come out, which we will surely sell and bring back to the system. So as we speak, there has not been anything done on that side. We will surely target to at least start with it in this financial year.
Right. Well, just to get this answer out of the way, Ramesh, has there been an inventory pile-up? If you have witnessed that in the quarter gone by, that's part one. And part two is, you've currently around about 7% in terms of market share for the organized market. Is there an aspiration to take it to double digits? And if so, by when do you expect that to happen?
Yeah, so market share gain has happened over the past 2 years, and it will surely be our target because store expansion is happening. SSGs are very strong. If you look at double-digit SSG has been a routine for the past 2 years now. So market share gain should surely happen, right? And what do you mean by inventory pile-up? I really did not get you there.
All right, we take that point. Just a final question before we let you go. The first 9 months of this year, basis your updates that have come by, it appears like the revenue growth is close to around 30% plus 34, 35% odd. What do you end this year with in terms of revenue aspirationally? And the next year, what is your SSSG target? Margins, you were looking at around 6.5 to 7.5%. Where do you see that, by the end of this year and next year?
Yes, if you look at 3 quarters, the revenue growth has been in the range of 35%, and Q3 has been in the range of 41% in India. So, with the expansion plan which we have, of course, we will not be able to target a 25% SSG, 24, 23% SSG, because we have never seen that kind of SSG in our lifetime. But I don't have any any view wherein I will not be able to tell why it should not come, because last 2 years it has been coming, even though we don't give that guidance of more than 7 to 8% SSG, but SSG on the ground is very strong. So if you look at the next year, even if we target a 7 to 8% SSG, very conservative, with the growth expansion plan which we have, revenue should be upside of what 25-30% is easily achieved.
All right, Ramesh, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year and for 2025 as well. That was Ramesh Kalyanaraman there of Kalyan Jewellers. The stock still down at the lowest point of the day, 7.5% lower now at 670.